US oil should be moving higher, to be honest, following the US-China optimistic trade developments for a trade, if you may. It's actually under pressure, and that is because API reported another fourth consecutive oil inventory build. Now, on other assets today, we're going to see, of course, what's happening with gold, because we are looking at metals and energies today. Gold also moved a little bit to the downside. There is some sort of bearish sentiment, but it's nothing to do with the fact that the Fed is expected to cut today 25 basis points. Of course, that will be exactly the opposite. It will have exactly the opposite effect on gold. And it's not because of Brexit developments, where the Parliament has now voted to go for an election in early December. They have actually approved the Boris Johnson's bid to go for a snap election. That didn't seem to move the gold market or the pound too much, to be honest, because there is still uncertainty. We should be expecting, of course, the gold to move today following the Fed's decision. We also have the Bank of Canada coming out with their decision as well. It's a very interesting day. And we're expecting, of course, the EIA for the crude oil. What's been happening with the US oil? That's we're actually moving still exactly as we expected. Okay, so we've seen minor 1, 2, 3, 4, and 5 is what we expect. We've had the minute 1, 2, and 3, and 4 potentially looking like it's completed. And from here, we expect prices now, because it looks like we have an impulsive move again, to move into the minute impulse degree down to complete wave 3. This, of course, will be the end of minute wave 5 and also minor 3. Then we should have 4 and 5. This is going to be intermediate wave 3. Now, of course, we need to pay attention to the 55 round number. Okay, we need the break of that, and then, of course, we need a break of this. I would say 3 trend lines. Okay, we need the first one, the second one, and the third one. Now, of course, we would see prices moving up. That wouldn't be a surprise, but we are very close to invalidating this sort of pattern, to be honest, because we're very close to the low of wave 1 in both minor and minute degrees, which means that this sort of impulsive move could be invalidated. Now, with AEI today coming out, it's very, very important to keep an eye on the oil. Gold, on the other side, is also moving exactly as we expected. Now, the scenario here is a little bit different, of course, right? So I was expecting this to, I'm expecting this to be a complex correction, right? And I was seeing this as a 1, 2, 3, 4, and 5, okay? Now, this is either a truncated A with B ending around 15 or so, and we're expecting wave C to go down to complete Y, and that would be also minor 4, and then we should be looking for prices to start moving higher. Or the other scenario, of course, what might be more likely, to be honest, would be that this is wave A, W actually, X, and also Y over here. So that means that we have one wave over here. This will be B, and B is coming with a triangle, 1, 2, 3, 4. So we've had 1, 2, 3, 4, and we also have the 5th wave to complete this sort of triangle pattern. So we should be looking at prices moving higher, and then we should be getting a retest or a rejection at the top, trend line top, and then look for sales for prices to go lower. This scenario actually is very likely if we are considering also the possibility of the Fed cutting rates today, if we take it into consideration, because what will happen, of course, is that gold would move up. Okay, so that means that we should have A, B, C, D, and another move up to the upside, and then we should start here looking for sales which would have a throwback, to be honest, right? And that could take prices up to 1533. That will be the latest stop, I would say, for bulls, given that the intermediate term is bearish, okay? So this is all for the day. A very busy and volatile session. If you asked, I will pay attention, of course, to institutional flows before the Fed's decision. But the honest truth is that I wouldn't be expecting the markets to move as much before the release and also the conference after the interest rate decision.